Good day, everyone. Thanks for joining us here in the charts. You tune into the Crypto Flight Edition. It is your fellow passenger stopping in with some technical details on the BTC and USD pairing. For those of you just stopping in, welcome. Consider joining us here on this interesting journey. Loyal subscribers, welcome back. I'm going to show you all a bearish diverging trend line and a bullish trajectory, and make sense of where we can potentially see the BTC price headed here in the short term. So let's go ahead and dive right into the charts here, shall we? All right, so today is March the 14th, 2021, and the current price of BTC is going to be $59,917.40, fluctuating there. It's down approximately 2.1% for the day. Okay. All right, ladies and gentlemen, welcome back. Let's see what we have here on the charts. This is what I've been following here. So I'll pull up the RSI. There it is. All right. So what you're witnessing on the screen is a bearish diverging, almost a trend. Remember, trends to me is considered 3 consecutive identifiable touch points. Okay, and so far we don't necessarily have the third touch point. These are the daily candles, by the way, on this potential bearish diverging trend that should take place here in the short term. Now, when I say it should take place here in the short term, I'm not bearish on BTC, by the way. We're actually still long the market, and we're anticipating more momentum to the upside. Now, let's just zoom in here on the RSI so I can give you the reason why I think that the market still has room to move up. For those of you who just don't understand what a bullish or bearish diverging trend is, let me just kind of go over that very briefly for you all. So notice this is the price action here overhead. This is just the price kind of going up, BTC walking up the stairs. Remember, when you're looking for a market to trending up, you're looking for higher highs and higher lows. And if it's not obvious enough, BTC is pretty much walking up the stairs, making higher highs and higher lows in the price. Now, notice this overhead trending line. This is just a simple ascending trend line. I'm on tradingview.com. This white line here where has been 2 identifiable touch points represented at this red arrow here. January the 7th, 2021 at about 42,000. And this red arrow here represented on, let's see, 58,000 about February the 18th. Okay, remember daily candles. So since there's been 2 identifiable touch points on this ascending trend line, I think it's safe to assume that if the market continues to go higher, it will at least get a test or an obliteration of the ascending trending line just overhead. But remember, what we're doing is just understanding, for those of you who don't understand, what a bearish diverging trend is, and it's not trending just yet. So let's just go ahead and correspond this with the RSI. The RSI is the relative strength, or the relative strength in the market. And if you notice down here, the same thing, we also have the red arrow down here represented on this descending trend line, and there's only been 2 touch points on this RSI represented corresponding with the days that we've already gone over, if you can see that. Okay, so until it actually touches this line again and get rejected is when it would be a bearish diverging trend, at least in my book. This is how I look at it. Okay, I know some people do it differently, but when/if this RSI's activity comes up to this descending trend line is when I would consider it again a bearish diverging trend if it gets rejected. So that approximate level would be, I don't know, for those of you who actually look at this stuff, it's like 75 on the RSI, again the daily. Okay. All right, so the reason that I say that the market still may have potential to go up, and it almost is like I have a bullish bias on this market. I'm open to volatility if it goes down all the way, like, I don't know, 38,000. I'm open to that, and I'm actually going to show you that here in a second. But the reason that I say that the market may have more momentum to move to the upside is because, remember, the trend is your friend until the end, and the trend is clearly to the upside. Okay, BTC is walking up like leaping up the stairs. Okay, and as it continues to leap up the stairs, it's safe to assume that it will continue to do that until there's some sort of imminent retracement or blow off top, which has not presented itself in the charts just yet. There's more room to go up to test the ascending trend line, which is why I say that, yes, it may have more momentum to the upside. I think we already went over that. It's at about $67,000. I don't think we did. Let's just say that takes place over the next, I don't know, less than 5 market days in a week. Okay. It will likely test or obliterate the $67,000 level. The only thing that would prevent that from taking place is if the market actually compromises the previous level of resistance, which is all we go over on the channel, which can be identified at this line that I just put on the chart, which is right there at about $57,000. Okay, so if BTC is continuing to maintain its overall trajectory, which is again clearly to the upside, it's likely it will find support at the previous level of resistance. It's not guaranteed it's actually going to do that and continue higher. Yeah, we're looking at about $67,000. Okay, now let's just say in the worst case, or the bearish case scenario, if the sellers are just kind of lurking in the market and they're just accumulating to make a very aggressive move to the downside, the first level that the sellers must compromise would be that $57,000 level right here, this white line that I put on the chart. And if they're able to successfully get the price below that level, then yeah, the first level they'll just go back down to is about $48,000. The last level that we left you wonderful folks out with on our last BTC update. Okay. And if, of course, that level fails, it could continue lower, but let's not get ahead of ourselves. BTC is in a bullish trajectory, and the one level that we all must be on the same page about is $57,000. Okay, let's just call it 57,134 if you want to get a little technical with me there. That will be the level that the sellers must compromise in order to continue down. But yeah, if the market is continuing up, yeah, guys, really clear for me to see 67,000 test or obliteration. And again, the reason that I'm saying that there's more room to go up is because this RSI is still away from this descending trend line. So the buyers have the opportunity. It's not guaranteed. The buyers have the opportunity, since the trajectory is in a clear, uncut bullish trend, to just kind of, coil up or just, just continue to go to the upside and at least test or obliterate this line. So it's a patience game for me right now. I'm patiently waiting to see how this market is going to, act or, behave over the next 24 to 48 hours, even up to 72 hours. Yeah, this I've already went over it, guys. $57,000 is the previous level of resistance. If the sellers can't get below, yeah, that's it. It's going to continue higher. So that's the range. You have the overhead target. You have the 5 days. Within 5 days, you have the level that needs to stay above in order to reach that $67,000 level. I think that maybe the thumbnail suggests. So that's pretty much it. Hopefully you guys enjoyed that. Leave an appropriate thumb to support the channel and a comment. That's all we ask. And also, before you go, we covered the traditional markets if you guys are into stocks. So we'd love for you to join us here on this interesting journey. Subscribe, hit the bell. We'll send you that information when it's available. So we covered everything, guys. Take care of yourselves, protect your portfolios, execute your strategies. Hopefully this was interesting. We're going to talk soon, and bye for now.